Hello, good evening. Welcome back. Welcome back to ABN AMRO live broadcast. I hope you had a great weekend, and I have prepared a lot of content for you. Even though it's just Thursday, we talked Thursday, and it was Thursday and Friday, and then but a lot of things happened in the stock market, and also we're talking about we were talking about the crypto market. There's a lot of movement. So anyway, lot of things going to happen this week. The coming week we have the presidential election going on, and then we also have the Federal Reserve. Are they going to cut the interest rate again, or they're going to hold it up? So let's see what's going to happen. Well, I have prepared some financial news, market analysis, and then I'll go over the general manager election for our U.S. branch, and then I'm gonna go over the four simple steps to successfully build your own portfolio, and it is very simple. All right. So anyway, let's get things started here. So let's go over financial news that we have. We have numbers. Hang on just a second. Yes, so we have some numbers just came out. Let me tell you something first. The number is not very accurate, I have to say, because when it comes to non-farm payroll, it was for the past week, and then we got the strike going on. You probably know about that. We have the Boeing strike, and then we also have that the hotel industry, hospitality industry. There was in the West Coast and the East Coast. I believe that there was a walk off on them in the hotel industry. So that's why it kind of affected the numbers. But anyway, let's look into that. Non-farm payroll increased by 12,000 jobs at last month after surging by a downwardly revised at 223,000 in September. So anyway, so there was the forecast of the payroll is like 113,000, and then the range like no jobs added, the range from the no jobs added to 200,000 position created. However, you got to think about that. That was because of the hurricane, and then also that we have the Boeing strike, and then also with hotel, you are looking at over 40,000 jobs were at stake here. So and then those people are counted as unemployed. So, but anyway, and unemployment right now unemployment still we set it at 4.1% right now. So then we are doing real good, even though we actually added the people that is on strike as unemployment. So anyway, so that's the reason why and then the rate did not increase. So the rate stays the same. So we are still at a very good rate right now when it comes to unemployment rates. So we are doing good so far. And these numbers are very, very important because these are the last number before the Federal Reserve cuts. So anyway, so that is important, but not as important as our presidential elections. So we have Donald Trump, and then we have Kamala Harris that going at each other, and is quite interesting to see Kamala Harris. Her focus just changed so much. Well, of course that she's gonna fly some bullets, shooting at Trump and saying that he's gonna take away Obamacare, and then Donald Trump is saying that no, he's never thought of that. Just going back and forth. But now it came to a point that right now it's almost like men versus women, and then minority versus the others, basically. Because as you can see, there's a poll. It shows here that Harris is leading among women by 12%, and then Trump is leading among men by 7%. So But I really think that Kamala Harris is doing it right because that, it's just that when you see her rally, basically you can just hear his woman voice. And I think she's doing good at that. She's doing really good at that. And she's going to different shows. She's showing up versus Donald Trump just basically just doing what he does. I don't know if you remember that he was like he has this garbage truck, and that's I think that is crazy. But you know what though? The most important part is we all know if Donald Trump is going to be got elected, we know that the crypto market is going to explode. That is for sure. If Kamala got elected, well, I have to say, nothing's going to change. Not much is going to change when it comes to stock market or the crypto market. I don't think that nothing's going to change. So right now, it is a great time to really start investing, not just trading. Investing. Well, we are doing trading every day. But I'm talking about investment, long-term investment, and we'll go over that when we'll talk about this when I'm going to go over the how we're going to build our portfolio, right? So yeah, so it's going to be next week. I see there's going to be a lot of recounts. So hopefully we'll find out sooner who's going to be our next president. Next one we have a bunch of earning reports. We have a bunch of them. We have the Magnificent Seven we had Tesla last week, and this week that we have a lot. We have Apple, we have Microsoft, we have Amazon, we have everything. So then, of course, we are going to go over Apple first, and they are doing real good, I have to say. Could be better, but is doing good because of the iPhone. They have better than expected the sales, I have to say. So let's look into the numbers. Let's look into the numbers they reported. The EPS, we're looking at $1.64, and then the revenue is close to $95 billion. All right. So now, but the forecast is only $1.06. So $1.06, and then we are looking at the revenue at 94.4. So it is better, but not by much. However, the revenue just for the iPhone, we are looking at 46.22. So then it is much more than last year, $43.81 billion. The estimates, it is 45.47. So that it beats the estimates, and then it's also beat by last year by a lot. However, this is a good sign. The reason why is right now iPhone is on the way back on track. The reason why is that when the first quarter we have, iPhone revenue is still 50%, more than 50% of the total revenue of Apple. However, last quarter it went down to 45%. 45% of the total of the Apple's total revenue now is back up, and it's gonna keep going up. The reason why is, first of all, the older iPhone, besides the iPhone 15 Pro and the 15 Pro Max, have the capability of the AI capability. None of them has it. So if you are an iPhone user, then you wanted to enjoy the AI functions, you probably want to upgrade. And that's why it got shortened. This upgrade cycle had been shortened. So that's why that you can only see the more that the AI functions will come out, it's going to come out slowly, one by one. So we have the 18.1 just came out, just gave us a glimpse of the AI functions, and then they're going to have 18.2, and then every single one of them. Now, finally, the iPhone 16, that's 16 Pro, 16 Pro Max. Yes, they have now. As soon as you update it, even with the newer iPad and also the Mac, then you are going to get the Apple Intelligence, the AI functions in it. So that's why it is looking good. It's even looking better. That I'm seeing that Apple sales is the iPhone sales is going to increase. The one disappointment that we have is the service business. The service business, yes, it increased like compared to last year. There is like a 10% increase over there, but the projection is $25 billion compared. They have 20. They just barely missed it. However, but anyway, but the thing is, they are well. If you miss it, you kind of missed it. So anyway, but we are seeing it real good because the reason why, because the service business was the one that saved Apple. Because when the iPhone sales was down, the service business was up. So that's why it kind of covers the whole business. But anyway, so they're doing really good. And let's see, the next quarter is the one that they're gonna bank. The reason why, because of the holidays coming in, the shopping is a holiday season. People go shopping, people buy gifts, and then it's going to be Christmas, and then it's going to be Christmas and New Year. So then we have Thanksgiving as well. So then we are going to see some really nice sales for the next quarter. So that is Apple. The next one I'm going to go over is Amazon. Amazon is a very different business. Even though they are the Magnificent Seven, we have Amazon in the Magnificent Seven, but the business model is extremely different. Even though Amazon is a tech company, I would consider it, but Amazon is included. That's a lot of business. Amazon owns everything. All right, so it's very diverse. And look into that. The Amazon posted 11% jump in overall quarterly revenue versus last year's to $158 billion, and which is definitely outpaced the estimates from the Wall Street. What it is like because of generative AI, because everybody wants AI now. Everybody's doing AI right now. The sales at AWS is up by 19%, to $27.5 billion. So because of the AI boom, that everybody needed a piece of that. So everybody is spending more money. So then they're using Amazon's, they're using the data center, and then they're using the network. So anyway, you're looking, so the CEO of Amazon estimated they will spend more money in developing AI, and that is going to be a problem. A lot of people see this as a problem. We're seeing it everywhere. We're seeing it in Microsoft, or we are seeing it in Meta platform. It is their CapEx, capital expenditures. They keep adding the capital expenditures. It means that it's going to cut into the profit. Even though they are saying that Amazon is fine. The stock went up 24% just this year, so it's going good. But you know what though? When we talk about the average price, 24% is not that much. So anyway, investment wise, definitely any Magnificent Seven you can invest in. But you know what? If you want to really trade it, I don't know about that. But Amazon is a very good company, extremely diverse. So basically, it's one company. It can be your portfolio. That you don't need to think about anything else because that Amazon has all the business under one roof, I have to say. So anyway, so that's Amazon. Well, then let's talk about Meta. Meta, basically, all the companies that reported this week, a lot of them beat the expectation. All right. However, it's just the CapEx is scaring people. People are not liking it. So anyway, let's look into Meta. Meta's number looks good. It just got upgraded on the price from $575 to $650. So which is great. The reason why right now the price for Meta platform it is $567, and now they just got upgraded on the target price to $650. So there is a lot of room for it to grow. So that's what the Wall Street said. That's what the analyst said, and I believe in that too. So anyway, But let's look into the revenue. Revenue and the EBITDA, they are both they are all exact. They exceed expectation. We're looking at revenue up 2%, EBITDA up 7%. So then they're all doing good. But however, that the guidance is slightly short of the market expectation, and the reason why is because they are going to up their expenditure, capital expenditure, and also infrastructure spending. They're going to expect to increase in 2025. People are not liking about that. So, but anyway, this is what it is. And then, but everything is looking good. Also for Meta platform, there has been a positive shift in the financial performance with recent earning report indicating a 19% year-over-year increase in revenue, a total of $40.6 billion, and then the company's operation income are exceeding expectation and reaching $14.4 billion with 43% margin. This is huge. So that's why, and Meta is doing a lot of different things too. They are more focused on AI now instead of just their platform. So I'm seeing this company is going to change hard. The focus is going to be more of an AI company than a platform than a social platform company. So right now the stock again is $567. The capex, the market cap is $1.4 trillion. Is looking great. Well, since we are talking about the Magnificent Seven, let's go over with Microsoft, still the third biggest or the third most valuable company in the world. So the report, there is their first quarter. So the quarter results top Wall Street estimates. So we are looking at the EPS. Now, actually, the EPS is not there. I'm gonna go over with you. So let's look into that. The stock Thursday, it went down 5%. All right, and yes, it meets the estimates, but only in revenue. When it comes to EPS, it's horrible. We have the company is making money, yeah, but it's not as much as they want, and I will tell you the reason why. Is $3.30 for the EPS. That is exact, but the estimate is $5.21 per shares. So quite a bit down when it comes to the estimate, but the revenue is still exceed expectation, and this is why. This is the question we need to ask: is that why is that revenue meets expectation, but we have the earnings is not there? The reason why? I mean, the business is growing. We're talking about the cloud service, Azure, that grew like 33%. But the thing is, we have the capital expenditure. This company is making $40 billion, but the capital expenditure is 20. Half of them went to capital expenditures just for in this course. So it is huge, and that's why they're not making as much money. And when they talk about a tech company like that, the margin's supposed to be huge. But right now, you're looking at it, is not that. It's not going to be that. People are not happy about that. So that's why the stock Thursday went up 5%. It came back up. Friday, up 1%. Anyway, right now we are looking at the stock at $410. Still worth $3 trillion. Still number 3. But number 1, Apple. Number 2, Nvidia, getting real close. But the reason why Nvidia went up like around 2% on the stock, and then Apple came down a little bit. So anyway, there's going to be a switch again. This coming week, I have to say. So that's Microsoft. The next one is not a publicly trading company. Recently, they are not making money, but they think they will. Is Apple? No, it's Apple. It's not Apple. It's OpenAI. OpenAI, they are doing something different. We all know OpenAI basically just make AI public to everybody, right? And it's the OpenAI, the ChatGPT, the 4.0 is awesome, I have to say. I mean, it is so intelligent, it's not even funny. But however, OpenAI wants to do something different. Now they wanted to partner with Broadcom and TSMC, Taiwan Semiconductor Manufacturing Company, that they are going to make a new chip. So basically, right now there are only two companies doing AI chips. We're talking about AMD and we're talking about NVIDIA. They're the one who designs it, and TSMC, they made it, and this is basically the only company that makes AI chips, right? But now that OpenAI wants to start kicking into this category, wants to start making their own chips. The reason why is that OpenAI is thinking it's too expensive. Just keep using NVIDIA's chips or any other company. So they want to start making it themselves. Then it's going to lower the cost. In the beginning, though, OpenAI actually wants to manufacture that chip, not just designing it. They want to manufacturing the chips, so that will definitely target TSMC. However, they kind of think about it because it's cost a lot of money. Initial cost to open up a manufacturing plant for the AI chips. It takes them too much money, so instead they kind of take a step back and say, you know what, I'd rather just design my chips and have TSMC as the partner and also with Broadcom to help them out with the semiconductor chips. So anyway, this is going to be great. And then the reason why is that there's one more company that is doing AI chips now. So then it's gonna make it very competitive in the market. So anyway, let's see, because you never know if AI chips is being popular and then the costs can be lower. Then then a lot of people will have a chance to have a piece of the AI, not just big companies that have the kind of money to develop them and use them, right? So anyway, great news for OpenAI. We'll see. It's just the beginning, and hopefully they'll start manufacturing chips, and then we'll see how is it different from NVIDIA and AMD. So that's OpenAI. The next one that I'm going to go over is Global Foundries. Global Foundries, and the reason why is that we have a law that's saying that we are not allowed to sell AI chips to some countries, including China. So, but according to the DOJ, it's saying that in the Commerce Department that Global Foundries has been selling to this company, the SJ Semiconductor, which is a subsidiary of, is there the SMIC. They are both on the list of we're not supposed to sell them those chips. Well, don't get me wrong. We do sell chips to China. NVIDIA sells chips to China. However, they do not sell the top of the line chips. So like NVIDIA do sell chips over there, but they are downgraded chips because it is regulated too. However, the problem is that in here that the Global Foundries, they are selling chips to these two companies is on the blacklist already. And then there were 74 shipments of a total of $17.1 million. And now the Commerce Department, they are going to be fined $500,000. So I was like, they are doing something illegal. And then they sold the product over there for $17.1 million. And why do they only get fined for $500,000, right? So this is quite interesting. So that's why I wanted something that we want to go over. And then are they really going to do something about it? In the Commerce Department, they are really, and then of course we have like the export enforcement units. Like they're looking at this quite serious. But you know what? If someone is going to break a rule, I think the fine should be bigger. So, but anyway, There's something to just to go over with you guys. The next one we have, this is the stock of the week. And the reason why, because Friday, I believe it's Friday, yes, Friday, this stock went all the way up like 40% pre-market. When the market closed, this is up 31.43%. And it's still going up. This stock is still going up because right now we're looking at the after hours. After hours, right now the stock is still up 7.2, like around 7%. So tomorrow, when the stock market is open, this is going to go through the roof. So, and the reason why, because Apple decided to invest an additional $1.1 billion to upfront. So it's like a prepayment too to expand the satellite service. Yes, Globalstar. Globalstar is a satellite company that has been funded by Apple for a long time. And the funny thing is, not only Apple is funding them additional $1.1 billion cash payment up top, and they will buy 20% of the company. So then that is around $400 million right there. So 1.1 plus 400 million, so that's $1.5 billion. And you know, before this company with the stock price up like this, it was like around the same price. It was you're looking at right now the company is the market cap is $2 billion and it was 1.5. So basically, because of that, yes, it went up. The company went up in price for sure because I'm seeing probably a 40% increase from before, and this is quite insane. And people are just asking why, right? Why would Apple invest in this company? Well, they've been working together for a long time. What happened is that, for example, for an iPhone, if you don't get any signal, you can still get an SOS out, emergency SOS out. It's because of the satellites. It's because of the Globalstar satellites. So anyway, so that's why. But I'm just thinking, but definitely Apple's gonna have new plans with them, just like Starlinks, right? Just like what Tesla does with the SpaceX, with all those satellites going around. I think Apple's have some idea of their own too. So anyway, this stock is going up, and it's still gonna tomorrow when the stock market opens, and it's still gonna go up. So something to watch for. The last one I'm gonna go over is Wendy's. Wendy's are closing shops. When I saw it, I was like, why? And then, and there's a reason to it, and that is a very smart move. They are planning to close 140 restaurants within the United States, but they already closed 100 before, and now they close additional 140. So you're looking at 240 restaurants location they are going to be closed. That's quite a bit, right? But you know what? Actually, it's not. I think it is a very smart move because of the president and CEO of Wendy's, Kurt Tainer, that he says the reason why he's closing that many restaurants is because those are the location. First of all, it's old, and second of all, it's just not generating money. So they picked out all of this, and then they also have plans to open extra locations. You're looking at probably extra location to like 200 to 300 shops. So 250 to 300 restaurants by this year. So wow, they're closing up shop 240 and then opening different location. I think it's an extremely smart move. That's something Walgreens want to take a page of that. The reason why Walgreens find out that 25% of the store are not generating money. They find out about that. They saw the numbers, but they still have problems identifying those locations. Wendy does it, and Wendy knows that they already identified those locations, and they're closing it up, and then they're gonna brand it, looks new, and then they open a new location, 300 of them, those mostly in the United States. And that's not a lot of that's not a lot of restaurants either. You think about it, globally, Wendy's have 7,200, like close to 7,300 restaurants. So you're looking at like 80% of them is in the United States. So closing up shops in here, we are looking at like maybe like a 4%. It's only like a 3 to 4% of the restaurant, so it's no big deal. However, those are the shops is not generating money. So that's right, it's a very wise move. We are looking at right now, the stock is kind of, we are looking at the stock Friday closing is up close to 3%. We are looking at $19.66, looking real good, Wendy's. Let's go over the market analysis. We have here all three of the major indexes are up. So we have the Dow up 0.7%, NASDAQ 0.8%, and also the S&P 500 0.4%. They are all up. So anyway, because of the numbers, the economic data is looking all right. I can't say it's spectacular, but what we see is that because there's like the lowest month, we have the non-farm payroll in the U.S. is increased like 12,000 jobs, which is the lowest month employment increase since 2020. However, because of the hurricane and also the strike, it kind of the number has kind of got mixed up in there. So I really don't think this is a real number. But however, our unemployment rates, because of that, is still 4.1 unchanged. So it was expected to be at 4.1, and yes, it's still 4.1. So expected, exact. So nothing really changes, which is good. So next week we are talking about the election, and then we also the Federal Reserve a couple days after the election. So then we will definitely see about that. And I am putting my money on, well, not the president, they're putting my money on there's going to be 25 basis points of 25 basis points of rate cuts, I have to say. And then the next one will be another 25, like December, before this year's over. So that will be a total of 100 basis points going to be deducted. So that will be my bet on the rate cuts. But now let's look into is the crypto market. Extremely exciting because we're seeing a lot of ups and downs like roller coaster. So let's see how it goes. All right. So last week it went down to close to 65,000, and then it rebounded and broke 60, broke 67, 68, broke 70, and reached over 73,000. So that is like a big 8,000 move in here, right? And all of a sudden it started coming back down again. So it kind of came back down to 70,000, and then it kind of came down. Right now we are at 68,825, or somewhere plus or minus. So anyway, a lot of strength. Well, first of all, we can already confirm 65. That's the 65,000. That's a support level, and then I would personally think that that 65 doesn't exist anymore. I think the real support level is at 67,000. So anything that is lower than 67, this is time to buy. Definitely, it's time to buy because this year will be. Because after this year, you will never, I would say, you will never see Bitcoin is going to be lower than 100,000, especially right after the presidential election. Well, anyway, as we can see, that whenever there's a poll saying that Kamala is winning, then we see Bitcoin just kind of drop a little with Trump media the same way too. So then that's why there's been a lot of news out there. And right now, this is the closest race ever. So we will just have to say basically it's 50-50. Now it all comes down to is the battleground states. So let's see how everything works out. But this is definitely right now, it is time to not just trade in the crypto market. We want to invest in there. We want to invest into the crypto market. So that's the market. And then let's go over something that about our company. So because we are doing an election too. I'm on the ballot too, yes. And then who is going to be the general manager of our U.S. branch? So anyway, let's go over some of the things that we had went over last time, and then you have already got some of the benefits out of it, and you will get better. It will get more. So anyways, like, since our company's entering the U.S. market, and then after nearly a year of laying things out, the development has been steady and our market scales has continued to expand. So we are here to achieve company's strategic development goals and rapidly increasing the U.S. market share. So now we already know that we have a strategic alliance, and we actually signed a contract where we have a conditional agreement with Congo Exchange, and that's the one that you have been trading with. But with the money with the funds that I kind of provided for you. So anyway, to ensure the achievement of the terms in the conditional agreement, so because we have specific numbers of members, and also the asset volume got to be in place. So that's why that our company decided that we are going to align as one, which means that our company, because I'm not the only one. We have two other teams that is doing the same thing. So that's why we need to find someone to become our leader in the U.S. So hopefully that's going to be me. So anyway, so this is the event. Let's go on, and thank you very much for your support. I'm still on top. And thank you for everyone's voting for me once a day. And you hit that support button for me. So thank you very much. And of course, I do have something in exchange, in return to you for your support. Is that once you guys are already using those benefits, which are the $500 up to $5,000 in trading funds. Well, but sorry to say that today is the last day for you to use the funds, but we're going to take back the funds tonight by midnight. However, as I promised, the profit you made out of that is all yours. You can cash it out. You can take it out if you want to take out the money. You can contact my assistant, or you can also talk to your trader about that, and then we will arrange your funds to come out to go over to your account. However, you can do whatever you want to. And you can continue to trade. You can, if you want to. And then if you lose money, which you shouldn't, and you probably saw the report I generated out that every single trade for the past week, we make money. Not by a lot, but one by one. So then it kind of adds up. Especially we're talking about the compound returning. So we are making money much faster than just regular investing, right? So anyway, and I do a lot of you message me about you want to add money into that. Yes, this is what it is, and I have to do an evaluation on you. And this is the reason why is I don't want you to, because you're not familiar with the trading platform and how we handle things, and I don't want you to lose money, basically like that. So that's why that for the newer members, I do need it to an evaluation of how you work out, because we also see some of our members was losing. There was like a few that loses money. The reason why is they entered the wrong crypto, or they just entered the wrong amounts, and just simple things as that. But when it comes to trading crypto, this is extremely important, all right? So that's why that I just want you to be fully prepared. Do I encourage you guys to add money into your account? No, I don't, actually. I just want you to make sure that you're very familiar with the platform, and then I want you guys to make money. And that's the reason why then, because of the conditional contract, that I need you guys to make money so that we can reach our goal. so then we can get our conditional contracts qualified. So anyway, so if you need to arrange funds to go in or out, the best way, talk to the trader and see what he has for you. And I will be, that we had the whole profit plans laying out for you. So anyway, this is just the beginning. So just hang tight, and then we'll have more things for you to do. All right. So anyway, thank you so much. Anyway, thank you very much for your support, and hopefully, I'm still going to be number one. So now let's go over the 4 steps to build your own portfolio. Very quick, very easy. And basically what it is you need to set up before you even trade. Because a lot of people saying that, well, when I invest, I just want to put some money here, some money there, or, things like, okay, that's the way to know. When we want to build a successful portfolio, you need to plan ahead. So these are the simple ways. It's just simple ways of how to build your portfolio. Very simple. Well, first of all, if investing is like a journey, then the asset allocation is all about asset allocation is the guiding lights. So basically, you have to set up your asset allocation before you even start trading. So the following 4 steps can provide you with important guidance to help you successfully build an investment portfolio that meets your needs. Yes, and that is correct, because all of us are different. All right, we make different money. We have like a different jobs, different investment. It is very different. So all of us are very different. So then it's just like, especially right now with our own situation now, and then what are we seeing? How are we financially, how we see ourselves in the future? So that's the most important part. Where you're at now and where are you going to be? So that's why to build an ideal portfolio, you need to have good asset allocation. 80% of the investment returns depends on effective asset allocation, but many investors doesn't really realize that. Right? So whether the money is wherever they have, or you already have it, or it just you just sold some of your properties, or maybe you just sold some of your investments, and then you have this kind of money, and you have the money. Then how are you going to use it? Where are you going to allocate this lump sum of money? So that's what we are doing right now. So step 1. Develop our strategic plans. So we need to strike the right balance. What kind of balance? We're talking about your current life, your career situation, investment goals, and also your financial inspiration. So those are the things that we all need to balance it out. There are some people just saying that, yes, I wanted more. And there are things too that what we kept talking about is that your returns, how much is a return, right? Your return is going to be different from my return, even if we have the same percentage. So that's the reason why that we need to find out that where we at right now and where do we want to be afterwards, and what is my situation right now that I will feel comfortable investing. So if you have $100,000, how much are you going to invest in? Are you going to use all of them? Or are you going to use part of them? And how are we going to divide it into different products, for example? So then we got to set it up from the beginning. So the combination of our overall investment goals, risk tolerance especially, and the financial knowledge will influence which investment strategy and asset allocation is best for you. Remember, it's all for you. Okay? So different person will have differently. All right, so let's get into step 2. Determine our investor type. Who are you? Are you the capital preservation type? Are you the balanced risk type? Or you are the dynamic growth type? What does it mean by that? So there are some people, they are just there for capital preservations. They just want to preserve the value of their investment, and that's it. They don't want to get lower. They just kind of keep it. So then you're talking about the returns. The return rates needs to be high. It just has to be higher than the inflation rates, and basically it. So, but there are the risk level that got to consider. The more the risk, the higher the return. Basically, that's what it is. But when you talk about return, higher the return, then there's a possibility you're gonna lose money on that too. So those are the things that we got to calculate. And how much do you really want to get out of it? A month, a year, 5 years? How are you looking at higher returns? And you need to know exactly how much do you want to return. So the return rates and also the exact amount of returns. And yes, the more money you use to invest, and you already know to invest is for long term, and sometimes the trading is for short term, right? So that's why we call it day trading. But we have to understand what are we doing. And then the thing is, the more money that you invest with, the less risk there are, and that is just a fact. But sometimes we have to understand is that, are we comfortable doing that? If you're not comfortable doing that, then don't. Because there's something I kept talking about mindsets. Because some people that when the market is down, when the stock is down, when the crypto is down, they panic. They panic because they are over the head, right? So that's why. But for example, you have $100. I invest $1, and if whatever it goes up goes down, it doesn't really matter. And you want to divest your investment, right? So anyway, so I'm talking way too much. I'm way over. But anyway, we'll talk more about that. So let's go to step 3. So we have step 3 right here. There's the 5 investment strategy types, including we have a fixed income, we have a valuable income, balance, growth, and yield. So each of them are divided our portfolio into different asset class, such as stock, crypto, bonds, and funds. What we're doing right now here is that because when we talk about bonds, we talk about funds, we're talking about FX, those returns are kind of low and it takes a long time too. So that's why, and especially talk about FX is just a lot. You have to pay attention to it all the time. So so basically we want to focus on two of the products, and that's it. It is, for me, investment in stock and crypto, and then straightly trading for crypto. And then also you want to know that percentage. What is the percentage? Like for example, you have $100,000. Where does it go to invest? Where does it go? How much does it, what's the percentage that gets into long-term investment? And what is the percentage that you want to reserve for trading? So what I would do is it really depends on what you're comfortable with, and then what is your rate of return and exact amount of return. So if you are more you wanted to be a little more aggressive, what I will do, I will put the bigger portion in trading, the short-term trading, than long-term investment. But if I'm very comfortable, I'm just I just let my money grow itself, and then I would just do some trading, then just to keep up, then for maybe some extra money, for example. So then you can probably put more in the long-term investment and less over in the trading assets, right? So anyway, so those are the things you will consider, and then finally step 4, how to make it a reality, how to make it work. By now, we should understand that the asset allocation is critical, be part of the investing, and should be initiated long before we start investing. We know exactly what it is already, and especially with our members already now had experience trading. What is trading with crypto market is so different. So then you know exactly what I'm talking about, what is investment and what's trading. So anyway, so there's something there was a saying out there, we are often taught to take control of our life. But when it comes to investment, once you have the groundwork done, basically you can just let go of the steering wheel and just let it do their thing. So that's why asset allocation is extremely important, because if you set it up early in the beginning, basically it is just automatic. You don't have to worry. You don't even have to look into. So, for example, a lot of people like to look into the stock price every day. You don't. You don't need to, because you know what? When we invest in stocks, it is for long term. I mean, even if I have some money I invested in crypto, I don't even look at it. A lot of times I would just let it grow. It doesn't really matter. So because I already have it's all diverse and then everything. So because I planned it out before I even start investing. So basically, if you have everything planned out, your profit will basically just works for you. All right, so that is all I'm gonna go over today, and well, have a great night, and let's see who our next president is going to be. Have a great night.